What's up everyone, it's Caddy with MoneyVest. So in this video, I wanted to discuss a very important concept when it comes to investing. And right now is the perfect time to be talking about this because all stocks are pretty much trading at near all-time highs. Most of them are trading at all-time highs. It's a market that has been ripping higher. We're seeing a very strong bull market, and of course we're at all-time highs for the S&P and the NASDAQ. So no better time to convey this message than right now. And if you remember 2022, and of course I was here. We were live during that time. We had a very significant bear market. We had the markets crashing down. S&P, NASDAQ, tech stocks. It was a complete bloodbath during that time. And I still remember doing live streams every single day and talking, to you guys and talking with, about the markets with everyone, discussing what's going on. Of course, there was the, all the scares related to geopolitical issues, inflation, the Federal Reserve raising interest rates. I mean, there was a lot of things to worry about back then. And that's when there was a lot of good deals also. There was a lot of great deals in the market. There was a lot of opportunities. And I remember I was in Italy at the time, and there was this bull in Milan, and I specifically joked about it with all of our members in the community because you were supposed to, it's like the lucky bull, and you're supposed to stand on that bull with your heel and basically turn around 7 times and make a wish. And of course, I wished for a bull market. And if you believe it or not, this is October, November of 2022. And since then, we've never looked back. The markets have just been ripping higher. So coincidentally, of course, it worked out. But the idea here is that there's times to be very, very careful and cautious, and there's times to be very, very aggressive and opportunistic. And this was a comment from one of our subscribers. And before we move forward, make sure that you drop a like and subscribe to the channel. I would really appreciate that. And again, links to our Discord and Patreon is going to be down below. Right now, we're offering a 51% discount for all the members. So, if you want to get access to the MoneyVest beta launch, this is going to be the entire platform. You can pretty much access everything related to fundamental analysis on individual stocks. So, we'd love to have you on board and get your feedback. And right now, we're offering a huge discount. You can lock this pricing in. It's a special price for a limited time, and that'll give you access to the entire platform on July 8th when we do the launch. And again, all the additional features and functionality and tools that we're going to be adding over time, you will not have to worry about the additional cost. But of course, eventually the price will go up if you don't join with this discount. So 51% off right now. You can join in if you are interested. So this was the comment on my Palantir video, because I talked about Palantir trading, of course, at $24, $25. I said, the fair value, intrinsic value closer to 15. That's where I would be a lot more comfortable in maybe dollar cost averaging or buying that stock. And this person very simply commented, if you do it your way, all stocks would be priced 30 to 40% higher, or minus 30, 40% is what they would need to come down to, right? And it's such an interesting comment and such an interesting mindset behind investing is that there are times, and I remember this, right? So back in 2022, we were talking about a lot of stocks that were trading at really, really incredible deals, specifically labeled videos that, you need to start buying, like you need to deploy cash because these are trading at quote unquote no-brainer levels, like P multiples for Meta down to like 10, Google at 12, Amazon at 16, Apple at 14, Nvidia at literally 18. I mean, there were some really, really insanely low prices back in 2022, and even some moments of 2023 because we did see the volatility spike, we did see the markets come down during that time, but of course nothing close to the 2022 sellout that we witnessed. So the bottom line is that market moves in cycles, right? Market moves in pendulums, and you as an investor always have to be aware where we are. It's that simple. And if you are not aware, if you are just a beginner, if you're just getting started, I think this is the most important lesson to take away, is that price paid determines your future returns. Always. Always remember that. It's not true for stocks. It's not true for real estate. It's true for everything. Everything. It's true for real estate, stocks, and everything else. The price you pay is the returns you get because price dictates your future returns. And I also want to go over some of the most important quotes from some of the greatest investors of all time. And first one, obviously, everyone's heard Warren Buffett's quote of the stock market is a device for transferring money from the impatient to the patient. And I'll ask you a simple question, right? Warren Buffett is sitting on $100 billion, in cash. Why isn't he deploying that money? Why isn't he the one buying stock right now? Because number one, he's very, very selective, right? He picks quality over quantity. Number two, he understands the price paid today is quite literally what's going to determine his future returns. So those two things are very important in the market. That's exactly why we have a process. We understand that there's a process of looking at companies, looking at stocks, being objective in our understanding that it's all a numbers game. Yes, there's a story attached to every single company. There's a story attached to every single stock. But at the end of the day, that story gets translated and filtered through into numbers. And numbers is what tells us the full story. Story in itself is just hopes and dreams and wishes and goals and targets. Numbers are the actual reality. And it's the numbers that we need to analyze and understand. And it's all math. If you feel that I'm doing a bad job in estimating the future, do it yourself and see what kind of numbers you come up with. So to give you a simple example, is that if you come over to, let's say, Palantir, and if you take a look at Palantir's expectations for future, so right now analysts are forecasting about a 38% growth rate, a 42% growth rate on a 7-year basis. And right now, of course, it trades at a P ratio, which is very, very high for Palantir. So if you come down 191 on a trailing 12-month basis, so incredibly high. So if you come over to the Analyzer tab, and if you let's just do an autofill, we look forward to 7 years. And if you want to apply a 42% growth rate and a P multiple of, let's say, 50, right, because 190 is just absurd, share dilution of 4.86. And if you hit calculate, now we're looking at a 32% share dilution, 32% lower than its intrinsic value, closer to the same levels that I calculated yesterday, $15 to $16. Now, if you come over to, let's say, a 75 times P multiple, and now you're looking at Palantir trading at its fair value. Quite literally, this is at its fair value because the price is $23.84 as of June 23rd, and estimated intrinsic value of $24. So you can make the numbers look whatever you want, right? You can make the numbers undervalued, overvalued, fairly valued. It really depends on you as the analyst. So if you believe that Palantir is going to grow at 50% over the next 7 years, and it kind of deserves a 75 times P multiple, then Palantir might very well be undervalued for you, and the actual fair value might be $35 with, of course, a very high price target, which is going to be intrinsic value of $35 with an annualized rate of return of just over $13 and 13.7% is going to be that analyzed estimated rate of return. So this really is a numbers game, but we have to ask ourselves, it's not about what is possible. We have to ask ourselves what is probable, what is most likely to happen. And patience is giving you the best opportunity to make the most gains. If you're patient enough, it gives you the best sort of standing for the long term. And Howard Marks kind of encompasses this really well. He basically says, and this is, on patience from Howard Marks in The Most Important Thing, the book, The Most Important Thing. Sometimes there are plentiful opportunities for unusual returns with low risk, like after the meltdown of Lehman Brothers back in 2008. And sometimes the opportunities are fewer and risky. And that's the pendulum. It keeps on swinging from one end to the other. Right? That's the pendulum. It swings from markets being extremely overvalued, trading at a premium, overbought, fewer opportunities, more risk, and fewer future returns, than to the other side when they're trading at undervalued levels, huge discounts, cheap valuations, lots of potential for gain with very minimal risk. So it's a pendulum that keeps on swinging on either side, and it's important to wait patiently for the former, he says. And of course, you should not act the same regardless of the market environment. You should turn aggressive when things are low and defensive when things are high. So it is really important because the price you paid is going to determine your future returns. And one of the last quotes is one of my favorites. When there's nothing clever to do, it's a mistake to try to be clever. So freaking on point. If there's nothing clever to do, it's a mistake to try to be clever in the market. So it's really important for us to always be aware of this pendulum and where we are. If there is prices that are expensive, like there's a lot of companies out there trading at all-time highs, valuations are in extreme. If there's overvaluation, if there's premium valuation, if there's expensive prices, sit back, do your analysis, be more objective, and just figure out, okay, if you are indeed thinking that the company can grow at 40% over the next 7 years, then buy it. Then of course, you've got a thesis behind it. You've got numbers backing your thesis. But you have to ask yourself, is what I'm thinking or what I'm estimating, is that probable? Or is that just one of the many possibilities, and that possibility is in a very, very low probability scale, meaning that Palantir growing at 50% over the next 7 years, is that a 90% probability or is that a 10% probability? It's sure a possibility, but how probable is that outcome? So that's what you have to ask yourself. And then finally, there's no asset so good that it can't be overpriced and become a bad investment. I think that's so true because, as I mentioned before, the quality of the company and the price of the stock are two very different things. It could be a great company trading at a very bad price, and it could be a very terrible company trading at a very attractive price. So those two things, something that we have to be aware of. What we're trying to look for is great companies trading also at great bargain prices, and that's what makes for a very good long-term investment. So hope you all enjoyed this video, and a quick update on patience and of course time, and just being somewhat understanding of the market pendulum. Make sure that you drop a like and subscribe to the channel. Let me know your thoughts down in the comment section below. And again, as always, happy investing. I'll see you all in the next video.